Welcome back. You're watching Stock Watch with me, Zinati Guma, and joining me to take your stock-related questions tonight are Ricus from PSG Hole-in-One Ruimsig and Wayne McCurrie from FNB Wealth and Investments. Be sure to send your questions on email at stockwatch@bdtv.co.za or via SMS on 41392 or on X using the hashtag StockWatch. Thank you so much for your time, gents. Let's actually start off with the high-flying resources today, and particularly the gold counters. What did you make of that buoyancy and where it was coming from, Wayne?
Look, I must say gold has always fooled me for so long. I've never understood what drives the gold price, what goes up, what goes down. There was no particular news out today that would have pushed the gold price up, but up it went, and up went the shares. And all that I do know is gold shares, the same as any other commodity, the price can go down just as quickly as what it goes up. And as I said, I don't understand the fundamentals that drive the gold price anymore.
I mean, as much as there's maybe no clarity on what drives the fundamentals, Ricus, do you have your own take? And also, would this prompt you to maybe want to feast on the gold counters?
Look, it's an incredible run, but as Wayne says, one never knows where it's going to stop, either to the upside or to the downside. It's incredibly volatile. As Wayne said, it's. I don't think it's as if we don't know which fundamentals drive it. We just don't know which fundamental is the most important at any moment, whether it be a dropping in yields, which makes gold more attractive, whether it's politics, which enhances safe haven, where people, I think, wrongly see it as all of a sudden an inflation hedge, and that drives it. So it's a combination of factors where at any time, the headline is always some other factor, but really, in the end, it's just sentiment. That being said, gold is obviously on a tear. It's at a new all-time high, which probably explains a lot of the move today. The gold price is an all-time high, and it can go higher. If you take a look at gold shares, they've been going sideways for about 3 or 4 months, I think. So who knows? Maybe another breakout, maybe another advance, but it's a trading thing, and you really have to be very careful in what you do. And if you're in it and it goes against you, do not be afraid to get out.
Yeah, and I think investors that are also maybe should be careful are ArcelorMittal investors. And actually, there was a viewer who had asked about a week ago why ArcelorMittal is flying and will it continue to fly? But we know that it definitely has not continued to fly, because today it's actually gone down almost 16%. Wayne, ArcelorMittal, what do you think of the stock, but also just what it is currently going through, and if there is any saving grace for it?
Look, I mean, if you look at the price history of ArcelorMittal, and you go back a little bit of time, it absolutely shot the lights out in 2022 on the back of some results. It went from, call it 1 Rand to 10 Rand, and now it's back at 1 Rand. Look, the fundamental problem with ArcelorMittal, and I'll come back to their extremely long statement today and all the things they said and all the things they're asking for. The fundamentally problem with ArcelorMittal is they're too small. They don't have enough volume to compete with the big players. So in other words, the only reason why we got ArcelorMittal was because in the old apartheid years, the government decided they need to manufacture steel. Our steel industry, our steel demand, just not big enough to justify a steel manufacturer. And we got ArcelorMittal. They cannot compete. The throughput is just minuscule in a global sense. Okay, so in other words, you just can't compete. Now, when you come to their statement, it was the normal story: dumping steel, big Chinese manufacturers, overcapacity, no demand for steel, all the stuff being dumped on our market. And then they say they want to stop this scrap steel export levy or tax or something. I didn't quite understand that one, but they want massive tariff barriers introduced to save the industry. So quite frankly, it's exactly the same problems that they've been having for years now. All of this isn't new.
And that's structural problems. What do you do
Yes.
with a counter, Ricus, where it seems that the solutions aren't anything that they can maybe get in the short term, and that, you know, it needs a lot of conversations and a lot of maybe policy maneuvering from government?
Yeah, I mean, isn't it the same we've got with SAA? I mean, SAA is too small an airline to compete with anybody, and ArcelorMittal is the same problem. Throwing money at the problem is not going to help them. Protecting them is not going to help them. It's simply not a viable business.
Yeah, it's very, very interesting. So it's going to be quite interesting to see, what they come out with, at least in the next 6 months. Let's go on to Sasol, because this is one, I think we get a question on Sasol almost every day. And Wayne, Mr. Wayne McCurrie has given Sasol as a stock pick. Is he still bullish on Sasol?
Yes, I am. But remember all of my caveats and qualifications there. This is not for widows and orphans. This is a high risk thing. I mean, if it does work out and it does pay, you are going to make money hand over fist of this on this one. Right. I mean, there's no question whatsoever if you make some sort of assumption that the markets that they operate in will return to some level of normality. In other words, global chemical prices going up and the oil price going to, I don't know, $85, $90. I mean, this share can go back to 400 Rand quite easily. I mean, I know it sounds outrageous, but it actually can do it, and it's possible. It has done it many times in the past. I mean, this is a highly cyclical company, and the cycle is completely against them at the moment. It is compounded by a catastrophic investment that they made in America that virtually bankrupted the company, but that's quite a few years ago now. But it's still a burden on them. But should the cycle change even slightly, you can get a spectacular return there. But this is risky investment. Okay, it's not ArcelorMittal, but it's still a risky investment.
Well, another question on Sasol, Ricus. Should I be worried about Sasol given the electric vehicles growth in China?
I think it's some of Sasol's problems, but it's the least of Sasol's problem. I think globally there is this view that we're at peak oil, or whatever you want to call it. In other words, that all of a sudden gasoline or oil, or petroleum-driven vehicles are going to disappear and going to be overtaken by electric vehicles. Not so soon, not quite that easy. But yes, it's part of the negative sentiment towards oil producers. But as Wayne said, because it is such a marginal operation, any operational gearing that it can get from an increase in both chemical and oil prices will be spectacular for the share price. But until such time as either the fundamentals of what they produce works in their favor, or they really streamline their business, it's still possibly in buying territory, but hasn't given that signal yet that we're in for a bullish run.
We're talking about it being in buying territory. Wayne, just lastly on Sasol, at the price of around 115 or maybe 115.14 per share, should I buy with China's stimulus around the corner and hope for a rally? How correlated are the China stimulus and Sasol?
Well, look, I mean, obviously Chinese stimulus and Sasol is correlated, but the Chinese stimulus itself, we still got to wait for a lot of details, and it just simply, I don't know whether that's going to boost consumption and demand all that much. I think they're just trying to sort out the balance sheet, trying to get the debt down, trying to help the municipalities, and trying to get some excess housing stock out of the market. But interest rates are falling worldwide. That should give some demand. That should give some extra demand for oil and for chemicals. So the answer is yes, buy it, but don't put all of your money into it.
There is, we're talking about interest rates, questions on banks. Is there something that I can still jump on, maybe First Rand? Are they still, Ricus, banks in buying territory?
Yeah, I think I don't think they are screaming buys, but they're in accumulation territory. Any dips, I think you can buy, barring any sudden economic shock to the global economy, which obviously you can't forecast or foretell. But I still think it offers value at these levels, and go for quality, and first round's one of them.
And there's also another question. Yeah, if banks are still a buy, and particularly, actually, Wayne, let's get to that. First rand, would this be one in your portfolio? I think you have chosen it before.
Yeah, look, it's hard for me to talk about First Rand.
Yeah.
But yes, it would be one in your portfolio. It is obviously one of the bigger banks. It's certainly shown very good results over years and years and years, and a very good return on capital, etc. But a lot of the cheapness is out of the share price. I agree with Ricus on that. Maybe you can take a punt on ABSA. I mean, you're taking risks there. But the other shares look fairly priced. Certainly when First Rand was down in the low 70s, yes, you could have bought it then. But it's had a strong run so far.
Just lastly on that, Ricus, the question further goes on to say, ABSA expects the SA economy to grow between 2 and 2.5% this next year. This will be great for banks in general. Which banks would look good for buying? I think the dividends will be great as well. Any preference there, Ricus, for accumulation, and maybe for any dips that we might have for buying opportunities?
Well, as Wayne said, ABSA on a possible turnaround. First round for consistency. Standard Bank, interesting with some of the developments they've got in India, also their electronic marketplace that they are forming. So that's an interesting one for me. So between those three, with ABSA being the riskier option.
All right. ASML has been one of the stocks in focus, and there's actually a question on it. What the reasons are for the sharp decline in the ASML share price. Ricus, just disappointments?
Yeah, yesterday they announced that they expect their demand to slow down, and the reason they gave us that people were buying their machines in preparation, so they stocked up on them machines, so lower growth going ahead. But I think it also illustrates the concerns surrounding the high-flying IT sector worldwide. If there's any kind of disappointment, you're going to get a severe price disappointment as well. I mean, it was down about 14% yesterday. I think it's about 5% down today, last I saw. Without there being anything absolutely wrong with the company. Brings them back into possibly buying territory. I think they're now sitting on about a 37 price earnings, which is not too bad considering the sector they are in. But yeah, that's the immediate reason for the price decline. But it's certainly longer term. I think it's at the right price. I would be an ASML, and if I've got it, I certainly won't be selling it just because we've had a bit of disappointing news.
Okay, all right. Wayne, there's a question here. Are there any AI ETFs that one can buy, or maybe any on your radar, and would you actually be buying at this point?
Look, I would think just a question of whether you're buying it or not. I would be, but I would maybe be buying slowly. The actual ETFs, unfortunately, ETFs is not a market I've got really any exposure to. So I unfortunately can't answer that. You must chat to a stockbroker. We don't buy and sell ETFs, unfortunately.
Ricus, any ETFs on your radar?
Not top of my head. The one that could be interesting is the old Kensho index, which unfortunately is not represented here anymore. Signa used to run a ETF based on that index, but the Kensho index basically does a black box calculation that has a huge number of holdings in the ETF, but it is weighed according to their participation in the fourth industrial revolution, of which AI is obviously a big part.
Yeah.
So that could possibly be a way in, but yeah, as Wayne said, rather to talk to an expert on that. That was just
All
the
right.
thought that I had probably.
All right. All right. Wayne, this one specifically for you. At the current prices, whether you think it's a buy, and Platts, and this is also one that you have chosen as your stock pick. I think the viewers just like checking in to see if you still feel the same about your stock picks.
Yeah, I still feel the same, and I will be first to say that I've been wrong on this one so far. But in investments, things can change into the future. I'm still positive on it. Physically, the share prices are just cheap. What's going to drive the platinum and palladium prices up? I think there's three factors there. First of all, the miners are going to cut back on production. They've already taken these huge write-offs, writing down their asset values. They're going to stop mining, or they probably have already stopped mining their marginal deposits. So there's less supply coming on stream. Second factor, demand. This move to battery electric is not as strong as what people predicted. It's in fact falling quite flat, to be honest, and a lot of people are pushing out their sales projections. This is all good for PGMs because there's more hybrid, more normal straight internal combustion engines being sold. That's very good for the PGMs. And then secondly, there's a bit of pent-up demand for motor cars. I mean, when you look in America, the average age of the fleet, of the cars on the road, is actually quite old, and lower interest rates should boost that. But, I'm not saying anything more than this is a normal cycle. This cycle has occurred numerous stages in the past. You only hear bad news is a structural change in the industry. Everything is doom and gloom. 5 years later, these are the best performing shares on the market. Then you only hear good news. Nothing will ever turn down. You must stay with these shares forever. We're just now at the part where there's just doom and gloom. It's a structural change in the industry. Nothing's going to change. So all I'm doing is just predicting a normal cycle.
Right. Ricus, I'm giving you Datatec. Is Datatec a buy for the bottom draw?
Well, they certainly had a very good sales update a few days ago. I think results on the 24th of October. I'd like to see that coming through, but yeah, it looked as if all parts of the company did well. It's not cheap expensive when compared to similar stocks in this industry, and I think it's it's because it's listed over here, but it's really a worldwide industry. So the price has been going nowhere for quite a bit now, probably about a year and a half, if I think about the graph in my head. But yeah, I'd like to see the results and see whether it can start breaking above 40, 44 rand. And yeah, and then start concentrating on it. But at the moment, waiting for the results.
All right. We're talking about waiting. There's a question here. Should I wait for Boxer to list on the JSE or invest in Pick n Pay? So this is coming from someone who's not already on Pick n Pay, who will get the Boxer shares currently. Wayne, Boxer or Pick n Pay?
Oh, I actually don't know. If you want Boxer shares, I mean, obviously you can buy Pick n Pay now, and Pick n Pay will still own part of Boxer. But it's a difficult one. I'd rather wait for the Boxer listing. Then you just get it pure with no other risk other than the risks associated with Boxer.
Yeah. Ricus, on your side?
Yeah, the clever analysts with their spreadsheets are telling us that, well, if you buy Pick n Pay now, you effectively getting Boxer and the rest of Pick n Pay's assets for free, which is a nice calculation. But the fundamental question is, do you want to be in either company? Pick n Pay, well, we all know what the trouble is there. And Boxer is a great operation, but it's got to compete with Shoprite. And I want to see that happen first. So, if you believe in Boxer, then buy Pick n Pay, because theoretically you're getting other assets for him free, and maybe there is enthusiasm when Boxer lists, although I almost never buy IPOs, initial public offerings. But from my side, yeah, also on the sidelines and see a bit of a track record building up.
All right. Gents, let's go into cars. I actually also saw this. What caused the rally on We Buy Cars today? Yeah, I think I saw that rally. Wayne, any reason?
There was no particular reason other than We Buy Cars is just even despite this very, very big run that it has had, this company is still cheaper. I mean, when you take into account future earnings and what it's going to do, as I said, despite the big run that we have seen, this company still looks cheap. I mean, the shares almost doubled since it was listed, but the prospective earnings still look good. It's a good company.
Yeah, up 4% today. Ricus, yeah, would this spur any buying movements from you?
Well, Wayne is the car enthusiast, so I'm going to rely on his word on that company. But but while we were talking, I was just thinking, we had retail sales figures coming out today, which show 3.2% growth, although last month was adjusted downwards. But taking a look at the trend of retail sales, it's looking pretty good over this year. So maybe if the consumers got confidence, and buying, then We Buy Cars is an obvious participant and beneficiary of that buying power.
All right. Well, gents, let us get to your stock picks for today. Wayne, what are you choosing?
Man, it's a difficult one, but I was thinking about, which stock pick to go for and what to think about. And I'm thinking about a few of the questions today. And one of the companies that also came out with results that were quite poor were LMVH. Louis Vuitton, Moet, and Hennessy. And this still looks cheaper after this fall now. I think it looks fair value, so I'll actually go for LVMH, despite the fact that their results weren't good because of China problems.
Yeah, very, very interesting. Just a question there, Wayne, why not Richemont and particularly LVMH?
No, just because of the share price weakness that we're seeing today in LVMH, Richemont hasn't really shown the same weakness.
All right. Ricus, what are you picking today?
Also in the consumer sector, it's New York listing Target. It's a general discounters. So it is a cyclical consumer stock, and I think the argument is whether it should be consumer defensive or consumer cyclical, depending on whether the American economy is going to have a soft landing or a recession. I am going towards the soft landing, which will be good for cyclicals, and then looking at Target in comparison with a competitor like Walmart, both price performance and also operational performance, where Target really misstepped over the past year or so. I think they're a very buyable point at the moment, historic price earnings of about 16, and great growth in its one-day delivery service, similar to Checkers' service. Playing catch up with its competitors in an American economy, which is probably healthier than it seems looking at data right now.
All right. Well, thank you so much for your time and for your analysis today, gents. That is all for tonight's Stock Watch. Thanks to our guests, Ricus from PSG Hole-in-One Ruimsig and Wayne McCurrie from FNB Wealth and Investments. Up next, I am back with the close. Stay tuned.